The long and short of it, the market's down a bit today. Colorado wants your Bitcoin just so that they can sell it. JP Morgan is in the metaverse now, and Canada's doing something that we never really thought that they would do. Let's get to it. Yo, welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we aim to make you a better crypto trader by showing you price action trading techniques from a long and short-term perspective. We also drop tons of tutorials, give our insight on crypto news and events. So if you're interested in this type of information, you know what to do in order to be notified whenever we drop videos. Let's go ahead and dive right in. So the state of Colorado wants your Bitcoin just to sell it. Let's take a look at this article here. U.S. state Colorado will accept Bitcoin for tax payments starting this summer. Well, this is very interesting. I think this is a terrible idea, and I'll tell you the reasons why in a second. Colorado Governor Jared Polis has just announced that his state will begin accepting Bitcoin for tax payments starting this summer. According to him, cryptocurrencies still pose the danger of wild volatility, which could affect the value of taxes remitted in crypto, which is the thing that I say about anything you buy in crypto. Okay, so any companies that are sitting here offering ways to buy their products with crypto, they face the same exact issue. So what do you think these companies are going to do when they retain the crypto? They're going to sell it for dollars. So it's just like you giving a company Bitcoin to buy something, and they're just going to turn around and dump that right back on you into the market so that you can do it again. All right, because what are you going to do when the prices fall? You're going to buy more Bitcoin. This is why we're saying that this is a bad idea, and people sort of need to rethink this. It's important that people know from a state perspective, we cannot be in the business of having exposure to a market where securities, including cryptocurrencies, flash away. If a state won't do it, what makes you think a business will do it? Okay, states, they have a little bit of backing from the federal government if they ever get in trouble. Businesses, not so much. Our expenses are in dollars. So when we talk about accepting cryptocurrencies for payment, they would be converted back into dollars for our purpose of paying for things. He noted that they would be contracting the intermediary to immediately convert the crypto back to dollars. So who will the intermediary be? Who knows? It could be as simple as a driver's license or a hunting license within a few months after that. But the biggest set of transactions are the taxes that people pay, and we expect to accept crypto by this summer, he continued. If you take a look at how much tax money Colorado actually brings in 2020, it was around $384 million. Okay, just take 10% of that. That's around $38.4 million being dumped back into the crypto market over tax season. Congratulations, Colorado. You played yourself. I understand that people want to incorporate this in so many different ways, but we have to be smart about what we incorporate it to, because all of this can backfire, folks. And this right here, I don't think is a good idea. Moving on. JP Morgan is the first bank in the metaverse. They've taken a massive first step into becoming the first bank in the highly heralded virtual world. All they did was really buy a lounge, and inside of this lounge, there's some pretty creepy things. They opened a virtual lounge in the popular blockchain-based world Decentraland. They call it the Onyx Lounge. And inside of the Onyx Lounge, you can find a roaming tiger, which I think is a troll in a lot of different ways. You can find a digital portrait of the bank's chief executive officer, Jamie Dimon, which will be pretty pointless and useless. And you can also view a presentation on the digital assets industry, as if JP Morgan is the leader of that industry. What do we think here? We think that this is completely pointless, once again, but it is neat to see them sort of jumping in. Now, they did also release a report, which I think is a lot more important than them taking a lounge up in the metaverse, okay? Every human sector is likely going to feel the effect of the metaverse, as the space is expected to provide over $1 trillion in yearly revenues. And I don't think they're wrong about that at all, okay? There are some areas of concern that we'll talk about in a second, but they're saying that the mainstream adoption in the metaverse is going to be fueled, you know, with more and more companies coming in. You already have Adidas, Nike, and Samsung there. JP Morgan is the first bank. Let's see what else we get The things that they highlighted in regards to areas of concern are technology, commercial infrastructure, privacy and identity, the workforce of the future, regulation, tax, accounting. They can name as many things as they want here. Social infrastructure need to be further developed. All right. Still plagued with poor user experience, poor avatar performance, and there are salient issues like regulations and taxes still to deal with as the industry becomes more mainstream. So, would have been more impressive for JP Morgan to say, yes, we're integrating, our banks and commerce and ways to do commerce into the metaverse. Yes, would have been much more interesting. But I think that this is a good first step for them to start to see the interest in this and understand that there is a real use case here. And JP Morgan, if you want anybody in it, I would assume that one of the largest banks in the world is probably a good pick. Let's talk about our neighbors, old Canada to the north here. Canadian protesters respond to emergency crypto measures with Freedom Convoy token. So if you guys aren't aware of what's happening here, there are some protests in Canada. The truckers are actually blocking off trade routes. So there's a lot going on there, right? And Canada is starting to feel the effect. So they started to implement some of these measures here, and it's affecting cryptocurrency. And of course, this makes the crypto bros completely irate because, people were using Bitcoin to do this. And since they were using Bitcoin, Canada essentially went in and said, okay, we're going to just start freezing your bank accounts now. Now, guys, the thing is, you can still move your Bitcoin around, okay, on different exchanges. But if they're freezing the bank accounts, then there's no real way to convert that Bitcoin into dollars to pay for the things that you need to pay for in order to keep this going, right? So this was a major blow to this protest. And it's a bit of an overreach in most people's opinion. So they really started to get the funding through GoFundMe. They shut that down, they moved to Bitcoin, and the response was, okay, let's shut down everyone's bank account. Okay, so they're going to freeze, suspend bank accounts. Very big overreach. They're citing it as we are broadening the scope of Canada's anti-money laundering and terrorist financing rules so that they cover crowdfunding and platforms and the payment services providers they use. These changes cover all forms of transactions, including digital assets such as cryptocurrencies. But do we really think that people doing protests are terrorists? The thing is that these governments, they can label things however they want to, okay? So when they mention terrorist financing, you guys really think that protesters are terrorists? I guess it really depends, right? There's ways to circumvent this, but the attack on people's freedom to protest is the thing that really bothers me about this. Let's go ahead and dive into the crypto fear and greed index, currently sitting at 51 right now, up from yesterday's 46. We think the market is fairly neutral, but people are starting to get a bit more fearful because what's coming? The FOMC. We've been talking about this every day for weeks, and there are some people who are thinking that there are additional factors, things like the Fed's balance sheet of $9 trillion, right? These are things that we need to sort of rein in, and that's going to affect equities. And if Bitcoin is tied to equities in a lot of different ways, and cryptocurrencies in general are tied to equities in a lot of different ways, then that will draw down the price on cryptos as well. So it's going to be a bumpy ride, folks, from what we assume. Let's take a look at the Bitcoin futures here as well. All right, now everything seems to be getting respected above this 13 EMA, but this is a sensitive line that we really think here, okay? It needs to be respected. Now, right now, we're sitting at around 42,000, which is how far that EMA has traveled up to. Will price drop to 42,000? Well, we want to remember there's a big CME futures gap here right around 41. So if price were to dip below this 13 EMA to take out this CME futures gap and then continue higher, that's very, very bullish for us, okay? But there's a lot of things that are starting to concern me more on the bearish side. The larger speculators still below the zero line net short. Okay, commercials pushing up closer to that zero line net long, and the retail speculators, smaller speculators, are net long. Okay, so this does give me a bit of a bearish vibe when I look at these charts. Okay, you're tracking back towards the EMA. Your open interest is up. Okay, your volume starting to die down a bit. That's bearish. Okay, larger speculators bearish. Okay, smaller speculators bullish, which gives these guys a lot more gravitas to keep pushing lower. All right, your elder ray does not look bad, but this right here does not show me real strength in this market. Okay, when you see the bears really give up, they're going to push very high off of this line. Okay, they're not giving up yet, folks. They're not giving up yet. So we have to be very careful going into the next few weeks leading into the FOMC. We want to see a lot more bullish activity to push us higher in price. But if we really can't break above, say, 45, 46, 47, it's going to be a tough road, I think. We're going to revisit those levels of 36, okay, around 38, 36. We're going to break below 40,000, I think, if we get to the FOMC and we're not above, say, 46, 47,000. All right. Money flow index currently sitting a bit higher. Okay, so there is still money in the market, which does give us a bit more bullish vibe, but the accumulation distribution is starting to swing lower to the downside. All right, so let's dive into these charts. There's a few things that we do want to point out before we get out of here today. Let's take a look. Okay, let's take a look at the Bitcoin 1 hour chart. So as we can see, the normal rules have been respected here. Liquidity set. Top side, boom, snatched through, and then price just reversed. This took place more towards the end of the day yesterday. Overnight, London did come rally just a bit. Going into the morning hours of New York, price did sit down. And at 9 a.m., the 9 a.m. hour is pretty brutal. It did come down and sort of fill in some of this imbalance area here, but since then it has started to rally. If we take a look at heat maps, there's not a lot of activity in this area. Price is just sort of getting jammed in here. Okay, so let's scroll this out a bit. This is the daily chart. And what we like to look at on heat maps is actually where the support would actually come in at. Okay, so if we were to zoom this in just a bit here to get a better perspective, all right, on these heat maps, it shows you sort of where the orders are sitting. So our first levels of real support are going to be somewhere around the $41,000 level. Bit of a gap here until you get to 41.3, and then you break below that. These real areas of support here are right under where that CME futures gap is. Okay, so this lends credence to us saying, should price go here? It could, because what price likes to do is seek for the liquidity areas. Okay, where are the orders? If we look to the top side here, there's not as much. Okay, you're going to get your real first resistance right around 50K level. Okay, and as you can see, there's lots of orders sitting there. You do have additional things to fight on the way up there. Okay, but not as bad as to the downside. To the downside, you have lots of orders sitting here. Now, whether or not these orders are long and short remains to be seen. But typically, when they're at the bottom of price or lower than price, they are long orders to go up higher. Okay, so a lot of this pressure is built up right below that CME futures gap, which does lead me to believe that if price were to start to rapidly fall here, you're going to see a drop below this imbalance. Okay, below these areas here to maybe where we were previously consolidating last week. All right. If we were to drop there and rebound very strongly, then yes, we are still in bullish territory, even if we were to break these lows here, because essentially all you will be doing is grabbing the liquidity from the downside to continue higher. Okay. So if this is the case, we would like to see this for Bitcoin if we're still bullish. Bearish scenario, we would still go further and actually start to attack this imbalance area here, because this is an area that we said price probably won't go to right away, but it should come back to. When? Maybe around FOMC. Now, this is a very aggressive move down. You got to always remember, aggressive moves up can be tailed by aggressive moves down as well. Kind of concerning for Bitcoin seeing the price action today, but ultimately, as long as we stay within this range here, above this order block or trade within it and jump out of it, we still have confidence in bullish movement. The market's mixed right now. Lots of different signals from lots of different places, okay? Even people saying on head and shoulders and inverse head and shoulders. We're going to show you why those things don't necessarily work in price, and why a lot of those analysis that came out yesterday actually aren't going to serve you any justice in real markets. And we can show you in a few different ways and cases that inverse head and shoulders versus head and shoulders, it doesn't really matter. Play the opposite of what the typical outbreak is, and we'll show you that in a second. All right, so if you want to break this down into scalp swing plays, my opinion would be your weight may be short today. I would say that you will want to wait for a retracement to confirm that, okay, which it seems that price is doing right now. But where are the levels to grab? They're probably up here somewhere around 44.3. If in fact you are thinking short, you want to see a spike of that liquidity before push down. Okay. If you're bullish, all right, here's the bullish case. I would think that price would need to fall a bit more, fill in some of this imbalance, and maybe even go for these lows here. Okay. Because as you can see, this was a nice move up. All right, liquidity grab to the low side here with this one to take out these lows. All right, and then you had your push up higher. So what do we really think? Where are the equal lows? They were already grabbed. So if you're long, if you want to be long, you sort of already missed that opportunity. The opportunity came at 9 a.m. this morning when New York made this really aggressive downwards push. Still sitting sideways, I would say be patient, right? Again, in these very choppy markets, the only real plays and opportunities are after liquidity runs, okay? So you can see it here, table set, liquidity ran, price falls, okay? Liquidity ran to the bottom side here, price rises a bit, but if your pressure's from the top side, it's not going to be as much of an aggressive move. So I would say that if you're doing anything today, you would think short. All right, not financial advice, but this is the way that we would analyze the market. Let's go ahead and jump into the longer term perspectives, total crypto market cap, as well as a few altcoins, and we'll go ahead and close out for today. All right, taking a look at the total crypto market cap here, looks like we are in a down day, but we are maintaining above that 1.876 trillion. You know that that is our line of demarcation between a strong and a weak market. Prices aren't falling off terribly today, right? 5%, 6% seem to be some of the largest losses in what we're tracking here. I'm sure that there's bigger ones if we just take a look. Yeah, seems like the largest loss is, what was it? Sandbox, actually. And that's Sand versus Tether. And the biggest winner right now is Neo. Okay, he actually has some pretty good news come out on Neo, I believe. So, you know, the market is down, but it's not down terribly. 2.27% is not a major swing in crypto. Pretty ugly day though. Okay, so if you were long based on this really big candle here, you sort of got sat back down in regards to price action, but nothing to be concerned about. We still think that price is in a fairly strong position. Let's take a look at Bitcoin daily and see what's going on there. Okay, Bitcoin daily chart. Now, what we want to point out here is not necessarily what's happening with price, because I'm pretty sure that everyone can see this is a down day. We're down around 2.1% when it comes to Bitcoin. But what a lot of analysts and what a lot of folks have been talking about is this inverse head and shoulders, okay? Now, the way that you should draw a head and shoulders is you find the first shoulder, okay? And let's just circle this off really quickly so that people understand the concept, okay? So here's your first shoulder, okay? That's your shoulder. This is your head, okay? And this is the next shoulder, okay? Now, people call this an inverse head and shoulders. Inverse head and shoulders typically break out to the upside, okay? Now, here's why head and shoulders are not always the best patterns to use for crypto. Let's go back to what previously happened, okay, in our last sort of price action from July up until current date for the most part, okay? Now, what some people would also say is that you have a head and shoulders here, okay? Head, shoulder, shoulder. The premise for an inverse head and shoulders versus a head and shoulders, okay? So you got your head here, you got a shoulder here, you got a shoulder here. Okay. Now, the way that they measure this is usually by the neckline. Okay. The neckline can be drawn sort of from right from where the two arches sort of meet. Okay. So if I wanted to draw a neckline here, I would probably draw it something like this. Okay. Now, the other part to a head and shoulders is saying that price should come from the peak of the head to the neckline. And this is where you're able to use this as a projection to where price could go. All right. So with that measurement, price was supposed to go down to, let's say, 27,285. But did anyone talk about this head and shoulders? They didn't. You didn't hear many analysts talking about Bitcoin going down to 27 in the summer. We were on an up move. Okay, so everybody was bullish. All right, we can take this from a larger perspective. So let's just put these little lines over here because we'll use them again, and we'll take our circles and say, okay, this is a head, that's a shoulder, okay, and now we can say that this is also a shoulder. Okay, so where's the neckline? The neckline, you can say, is sort of this yellow line here. right? And if we were to take our projection from the head, okay, down to the yellow line, gosh, just get it right, okay, there you go. What does this projection say? Well, from the neckline down, what are we looking at? Oh, this says that Bitcoin should be at 10K. So, okay, we see that the patterns don't necessarily break out the way that we think they are, right? Because we thought that this projection here for this head and shoulders was going to push us lower to, you know, these levels here, and it didn't. It just reversed on us, okay? Same thing here. Shoulder, head, shoulder. We're supposed to go lower to 10K. We didn't. We reversed, okay? So when guys show you head and shoulders on chart patterns, all right, it's not necessarily the best assessment to take because these things go inversely. Okay, they don't follow the pattern, the breakout that, you know, the books say they should follow. Let's draw the next one. All right. And this is for your sake as a viewer so that you understand that what you see on YouTube isn't always good, guys. What we show here is a bit of a different perspective. And I'm not attacking anyone because a lot of people do this. Okay. What we're doing is trying to educate you on, you know, showing you a better way. Okay. Now, here goes the other head and shoulders that we pointed out before, right? Shoulder, head, shoulder. Which way are head and shoulders supposed to break out? To the upside, okay? Inverse head and shoulders. Where's your neckline? Let's say somewhere around here. Let's be fair, okay? Neckline somewhere around here, okay? And let's take our projection line and draw it down from that neckline to... And this one's tricky because there's a big wick down here. Let's use the wick, right? Because if we're bullish, we want to be as bullish as possible. So from this neckline here, okay, going up, we are seeing $55,000 Bitcoin. If anyone is telling you that we're going to $55,000 because of an inverse head and shoulders, after prices already showed you that we have not broken out in the direction of head and shoulders multiple times on larger time frames, then it's not necessarily the best pattern to use. All we're looking at here, folks, is where we're getting in, where we're getting out. We're not looking to be the chart pattern guru, all right? Chart patterns will get you wrecked. I'm pretty sure that a lot of people will not admit this to you, but they do. The reason why I stopped trading chart patterns is because they don't do what people say they're supposed to do. Here's the thing that most people just don't understand about chart patterns either. They want you to see the inverse head and shoulders. They want you to see the trend line. They want you to see the channel or the, you know, broadening wedge or whatever it is. They want you to see this. They want you to draw this. They want you to talk about this so that they can play inverse to it. It doesn't matter which way price breaks out. Again, go to the Bukowski site. You'll see that in all reality, these things break out almost randomly. This is all downwards action, guys. Inverse head and shoulders here does not give me enough confidence to say that price should launch out to 55K. All right. You still got to break 45K. All right. And right now we're having a hard time doing that. So it's a hard lesson for most people to learn. And I had to learn that hard lesson as well. I had to stop looking at things from a head and shoulders, you know, ascending triangle trend line perspective, indicator perspective. You guys see, I've never used the indicator in any of these videos here. All right. My indicator, heat map. My indicator, imbalance. Price goes down, it's going to come back through it. Price creates another one, it's going to come back to it. These are the things in price action that reveal themselves to you, but most people don't know how to look at. And this is why we say we offer a different perspective, because who else is going to tell you that head and shoulders typically don't work? All right. Real traders will tell you that. Real traders will tell you that because we've tried it thousands of times and it hasn't worked for us. Okay. So you have to find something that works, and price action works. Price action is the leading indicator. That's really the main point of what we wanted to show when it comes to the Bitcoin chart. All right. You're going to see a lot of this: head and shoulders, inverse head and shoulders, trend lines. A lot of that stuff is fine, but you have to play these things with the variables that present themselves to you. You have a resistance line right here, okay? Why would an inverse head and shoulders break out completely from a resistance line if you don't have the real bullish news that you need in order for that to project in that way. Okay. FOMC is this close, guys. It's not, it doesn't make sense for us to really think that 55K is in the cards before FOMC just based on a head and shoulders tape, chart pattern. All right. So this is thinking that we want our audience at least to correct. If other people are using it, you can use this to your advantage because you can say as a trader, okay, head and shoulders is starting to develop. I'm going to go short as soon as this breaks the trend line, because why? There's so many people that want to buy right now. By me going short, I'm on the same side as the institutions. And that's where I want to be, because who's going to sell to them when they're buying based off the head and shoulders technique? The institutions. All right, let's go ahead and jump into Ethereum. We're going to cover these altcoins very quickly, but that was an important part that we think people need to start to reconsider when it comes to technical analysis. All right, same exact thing. Now, here's a shoulder, head, shoulder. We're supposed to break out, right? It doesn't. It goes the other way. Okay, same thing here. Even though this is kind of hard. Shoulder, head, shoulder. We're supposed to break down, we go up. Guys, I can show you this on so many different things. Why is this still part of our lexicon as traders? We need to get rid of it. All right, chart patterns are things that will get you wrecked. I will say it over and over and over and over again. All right, anyway, let's cut through these quickly. Ethereum currently trading right now at 3,084 in a low premium zone. We want to wait for ETH to drop down to 2536 or lower before we become buyers in Ethereum. Let's take a look at XRP, currently trading right now at 81 cents. In a discounted zone, we think XRP is still a good buy. Anything below $1. It's down today 3.85%. But again, these are long-term HODL positions that we're taking. So accumulating XRP under $1, we think is still a good bet. Let's take a look at ADA. When it comes to ADA, all right, still within this little zone of price action that it can't seem to break out of. All right, so ADA seems to have good days and then they just turn into bad days. Okay, good start of the week turns into a bad end of the week. It's just the way that it goes for ADA right now. Currently down 2.71%, holding on a little bit harder than other cryptos. Bitcoin seems to be dominating the market right now with the least loss next to Terra Luna, but everybody else is down at least 2% today in regards to the charts. All right, so Cardano in a discount zone. Again, lower areas of the discount zone is where we want to accumulate Cardano based on the previous price action, which has been pretty negative to say the least. In regards to Solana, you have a discount price action here, $99, and we said anything under 100 is a good buy for Solana, we believe. All right, so in these scale in areas, these are where we're accumulating. And again, dropping $10, $20, $30 here. It's not a really big bet that we're taking, but we are able to accumulate for smaller prices in these areas when it comes to Solana. So under $113, still a good buy. Under 88, even better. As long as you're in a discounted zone, we think Solana is going to definitely push to these low premium zones once a bit more bullish activity comes into the market and it kind of cools off a bit. All right. Okay, so let's talk about AVAX, currently trading at $92 in a low premium zone. If AVAX were to fall back into a discount zone somewhere around $77, that's a supreme buy for us. As you guys can see, scale in, the scale out levels hit, then jump back down to another scale, to the same scale. All right, let's talk about AVAX, currently trading right now at $92.94 in a low premium zone. Scale in to scale out level hit, price came back down to it, seems to be trying to take off here. AVAX is trading a lot more aggressive than a lot of coins right now. Okay, the percentage gains in AVAX have been pretty nice compared to other price movements over the course of the past couple of months. All right, so AVAX is one to watch in a low premium zone. Anything under $77 is a buy for us when it comes to AVAX. We do anticipate that it may dip back into this discount zone, and we want to take advantage of that. Let's take a look at Atom. All right, when it comes to Atom, we are in a low premium zone here currently, and price is still respecting our trade. It has not broke below it, and we are still currently holding on to some of this trade. But if price were to break up to this scale out position, we would start to take some profits here. We still do think that there's a fairly good chance that price will drop down into discount zones where we do have additional scaling levels, somewhere around $22 to $20 starting. All right, but really, anytime you can get Atom under $23, we think it's a good buy in a discount zone. Let's go ahead and move on to Polkadot. All right, Polkadot also in a discounted zone. Scale in the scale in positions, areas to accumulate in our opinion, because Polkadot does seem to jump out of these areas when there is bullish activity in the market. So good areas to accumulate at the current moment here. $19.22. Polkadot down pretty big today, almost 5% for the day. But we still think that in these areas, pretty good areas to accumulate. Let's talk about MATIC. All right, when it comes to MATIC, also in the low premium zone, we will wait for MATIC to start to drop below into our discount areas because as you guys can see, staircase type of movement in price, lots of nice aggressive movements out of the discounted area. So we're waiting for price to dip below $1.50. Once it does, we will take advantage of MATIC, currently trading right now at 177, down 5.39% on the day. All right, let's take a look at Luna. Luna is also respecting this scale out position hit, touched it again, starting to come down from it, but Luna's been holding pretty strong, pretty nicely as well. Sort of a downwards price action, very similar to what you're seeing with Bitcoin, but you do see that the majority of the price action here has been bullish. Okay, so these are the type of things that we like to see in the market. For right now, Terra Luna currently trading at 55 bucks in a low premium zone. We want to see if we can get it around $53. That would actually be a good buy. First scale in positions for, you know, a larger position will probably be somewhere around 43, right? The lower the price goes, if we're still in more of a bullish sentiment of a market, which I think we still are, these are good opportunities to take, right? Market sentiment always dictates whether or not you're going to scale in fairly large or little, right? If we're in bullish territory, or if it seems that things are really starting to turn around, which I don't think we have confirmed yet, you know, you can take a larger position here. But right now, scale in the scale out levels hit. You guys can see that these things do get respected and price is starting to track itself back down into a discount zone. We will take advantage if it does reach that area. Harmony One in the discounted zone, scale in levels being touched here, but not really reaching the scale out levels. But if you were to play the discount to low premium, you could have still taken some profit on some of this here. Okay, so price is just essentially finding the floor, reaching for the floor, bouncing up off the floor. So scale in levels of around 17 cents to 14 cents seem to be good areas to jump in. If you are accumulating anything under 20 cents, we think is a good pick for Harmony One, because as you can see, price does jump up and almost doubles what you can make here if you're accumulating in these lower areas in price. All right, so we still like Harmony One. Think this is a good project to watch. Let's move on to Fantom. All right, Fantom currently in the low premium zone, trading at $2.01, and we think that Fantom's a good buy anywhere under $1.83. Our first scale in zones are around $1.68, $1.49. And right now, we think price may actually start to reach into that discount zone. You can see somewhat of lower lows, lower highs being set here. This low right here seems to be the floor. So as you guys can see, as long as you crossing into that yellow line, okay, into the discount zone, and price moves up out of there, this does give you confidence that these are more support levels for price. And if you dip a little bit lower, it's even a better deal. So this is the way we approach the market. We're looking to get into Fantom anywhere under $1.83. We think we'll be buying it at a discount at that point. Chainlink is currently trading at $16.65 in a discounted zone. And we think that Chainlink is starting to find the floor here. Okay, accumulation areas and scale in areas are being hit. $14, $17. We even have one scaled in a bit higher based on the previous price action and what we think Chainlink will be as far as an integral part of the blockchain, you know, technology itself, and all of these other coins and integral systems that are coming together. We think Chainlink has a future, so accumulating in these discount zones we think is still a good idea. If we can get it lower in the bargain zones, we will definitely accumulate there as well. But right now, Chainlink trading at $16.66 in a discounted zone we think is still a good buy. When it comes down to CRV in a discounted zone, price is keeping, you know, within this area here, scale-in levels being hit. And as you can see, there are some opportunities to take profit once you reach low premium, but we haven't really hit our scale out areas yet for CRV. When it comes to price action, though, we think CRV is very strong. So we're anticipating that this will happen. And once price does start to reach into these lower levels of the discount zone, we will be accumulating. But CRV currently trading at $3.09, down 2.47% on the day. We are just waiting to accumulate more with any further price depression. When it comes to Enjin token, also in accumulation zones in the discounted areas. Okay, so Enjin pushing up from scale in, not really reaching the next scale in or low premium zones. Okay, but once it does, we probably want to start to take a little bit of profit off the top if in fact you are accumulating here. Okay, these coins can jump out of these zones relatively quickly, as you guys can see. All right, so always look at the previous price action, always monitor what's happening in the market, and then make your decisions in regards to what you're willing to put in for a scale in position. All right, and we set ours here at $1.75, $2.32 on the higher side of the discount zone, but this is really the level where we're looking to get in regards to some more Enjin token. All right, $1.75. But Enjin token currently right now at $1.91, trading 3% down for the day. All right, when it comes to mana in the low premium zone, okay, Decentraland, of course, very big news with JP Morgan Chase. I think that news came out yesterday, jumped them from a discount into a low premium zone, but now they're trending down with the rest of the market, right? You guys see these really big negative days, right? You can kind of just chalk that one up. You know, it's going to be a down day. Coming into Asia around 7 p.m. Hopefully the tide will change a bit. Asia has been buying as of late, which is sort of interesting to see. But they have been putting money into the market, okay? Ultimately, though, Decentraland, very strong project. This is something that we're continuing to track. Anytime you can get it under $3.04, we think it's a fairly good buy. If we were able to get Decentraland, I would say, if we were able to get Decentraland around $2.11, we think that's an even better buy, but who's to say, right? But for the most part, anything in this discount zone, we will be trying to take a look at when it comes to mana. Currently trading right now at $3.18, down 4% on the day. And when it comes to Sandbox, showing similar price activity, jumped them into a low premium zone, came right back down into a discount zone. So, you know, you do have your scale in, scale out levels being represented and hit here. So Sandbox, very similar to Decentraland, but I think Decentraland may start to take a bit of an edge on the Sandbox over the course of this year. Will be very interesting to see. That's a prediction. Let's see if it actually plays out. All right, so that is your market capsulation. Sandbox right now trading at $4.08, down 7% for the day. So, maybe people are saying, hey, we need to get out of Sandbox and go to Decentraland. You never know, because Sandbox was really taking off away from Decentraland for quite some time. And now it seems that the playing fields are leveled there when it comes to the metaverse. All right, so lots of positive news here when it comes to that. I would say that we want to continue to watch these areas very closely as we move forward. Let's take a look at the Bitcoin heat map just to close us out here on the daily. Have to be careful. The bears still have some pressure coming into this market right now. As you guys can see, the orders are being served up on that side. So very interesting price action going into the next couple of days. All right, the weekend again may be sort of dormant and sideways, but there are opportunities in this market. Whenever price does dip for your longer term perspective, you do want to take advantage of that. Whenever price does rise, you know, you do want to take your profits. Okay, so that's what we're looking at in the market, folks. Let's go ahead and start to close out for today. So what did we learn today? Well, we learned that price action is king. I mean, when it comes down to analysis, guys, the reason why I preach, you know, the things that I preach so hard and I don't go into all of these different chart patterns is because I have the experience that tells me that it doesn't work. For some people, it does work. All right. And there are times when these chart patterns sort of become self-fulfilling prophecies, but they're usually around very, very important levels in price. Okay. Here's the thing that I think most folks that start trading, right, get confused about. When you see all of these angular lines and all of these indicators and all of these different things that people use in order to judge which way price is going to go, it gets confusing, right? And there's so much to learn. Everything from candlestick patterns to chart patterns to, you know, all of these different ways that people explain them. And it's all subjective, okay? What's not subjective is levels in price. 44,000 is 44,000. However many diagonal lines and things you cross across 44,000, the price level is still the same. And you want to know what institutions look at? They don't look at trend lines. They don't look at indicators. They look at price, okay? Which is why price is your leading indicator, which is why we'll always go back to price as the leading indicator and then use the supplementary things such as chart patterns or maybe indicators, things like moving averages, to confirm our case, not to build our case. All right. Never use these things to build your case. Never base your trade idea or actions off of a chart pattern. The chart patterns are there to manipulate you in a way as well. All right, so that's an understanding that we want everybody on this channel specifically to understand and start to trade with, because that will be when you start to make better trades. That will be when you start to end up on the right side of the market rather than the wrong side of the market. All right, there's a lot of information out here that will get you wrecked. And part of why we even started this channel is to combat some of that. And we're not calling anybody out, but we're just keeping it real. All right. And I'm sure that people who have been involved in this space for quite some time know exactly what we're talking about. All right. So it's your boy Maestro. Not trying to make no enemies here, but certain things need to be said, because this is dealing with your money. OK. And I'm not a financial advisor, but I do know BS when I see it. And I do know that this audience deserves better when it comes to, being a crypto trader, because right now I think we're lacking in a bit of the way that we explain this to people. All right, so price action to us is king. This is going to be what we follow. This is what allows us to keep a winning percentage way above the norm, and we'll continue to keep it way above the norm. All right, so with that being said, man, I think I did enough rambling for the day. It's your boy Maestro. It's the long and short. Thanks for tuning in. We out here. Peace.